We are rolling. Okay, everybody. I am here with two pioneers in the Midwestern investment property landscape, Aleks Vetushko and Ryan Stenberg. Why don't you two give me a little introduction about both of you? I think everybody today is going to be super interested to hear what some young 20 somethings are doing with regard to property investment in other states. I think it's super cool.
Sure, yeah. I'm Alex. I am 24. I work at PayPal as a software engineer. And then, go ahead.
And I'm Ryan. I'm 23, working as a technical program manager over at Google in Sunnyvale. And we're out here in Tahoe right now. Yep.
You two are like way younger than your average real estate investor. How the heck did you even get started in doing this? Tell me about it.
So we both graduated around the same time, and we both started out making good money, and we were saving a lot of it, didn't really know what to do with it. And we wanted to do something with it. We wanted to invest it. And stocks just seemed very passive. You kind of put money in and, it just sits there. You don't do much with it. And so we were looking at other things, other options. We came across this blog called Bigger Pockets and started reading a lot about real estate, listening to a lot of their podcasts.
Yeah, and for me, it was really like hard to get excited about stocks because, as you said, it's passive. Like you'll put your money in, you'll watch it, you'll kind of like cheer for it when it goes up, and then cry when it goes down. And but with real estate, there's a lot more effort you can put in that translates to return. And so it's more like solving a puzzle or a problem, and that's really exciting in my mind. As someone who really likes to solve problems, that's what you're doing every day. And so that's something that got me excited to when I was going to the bars, say do I want to spend $10 on this drink or do I want to save it? I couldn't get excited enough to do that when it was with stocks, but when it was with real estate, I was getting excited about it. And so that was an easy decision for me.
All right. So tell me more about this puzzle analogy. How does that apply to a fourplex in Ohio?
Yeah. Real estate's cool because at the end of the day, you're running an analytics game basically, where you think you're trying to guess at the variables, make assumptions, and then plug in numbers and do some math, right? So there's all these different kind of things that, as engineering background people, we kind of specialize in. And then there's a tangible component to it as well, where you're actually buying real property instead of kind of a virtual share of something online. So I think it makes it a lot more like a game than something like stocks when you're able to make it tangible like that.
So where have you purchased properties so far, and what types of properties have you purchased?
So far we landed on Cincinnati, Ohio. We have 2 multifamilies in Cincinnati.
Why Ohio? I mean, we're in the Bay Area. Why, what drew you to the Midwest?
Yeah, early on, what we're looking for is cash flow because it gives us a lot more flexibility. And actually, there's a few more reasons, but I'll start there. So the cash flow gives us a lot of flexibility to pivot the money where it's going, invest it in some other markets if we want to. It also lets us one day, hopefully be able to quit our jobs if that's something we're interested in. Despite enjoying both of our jobs, there's tons of other things out there we enjoy. And so you're always trying to set yourself up for the best opportunity to have options later, right? And so cash flow really does that for us. Whereas you invest in the Bay Area, you're investing in appreciation and you're kind of crossing your fingers and hoping. And so the returns over the long run, you may even be better or greater. But we're not really in the game of having the best 30-year outcome. We are trying to become financially free somewhat soon, and this is a very high confidence route towards it if you pick the cash flow route. So the Midwest does that quite well, and especially Cincinnati, and that's one of the reasons we ended up there.
One of the things, at least in the Bay Area, is that unless you have significant amount of capital, you're not going to cash flow off the bat with a loan. because just the interest on, 800,000 or $1 million is just going to eat into anything that you're going to get in your rents. So
Yeah.
it kind of makes sense. It sounds like you can purchase properties out there in Ohio with, how big of a loan are we talking? 20%, 25%, and you're still able to clear a couple hundred a month, grand a month,
Exactly.
whatever it is.
Yeah. Yeah. And we're looking at things here because, I mean, we live in San Francisco. So we're looking at places that we may, kind of do a little house hack with and try and rent
Yeah.
out. So we've ran the numbers in San Francisco again and again and again. And so we know it's tough to cash flow in the Bay Area.
It's tough. You're gonna have to go out to like Stockton or Tracy. Maybe if you can get into somewhere like, I don't know, Richmond or Vallejo, you can find some better cap rates up there. But I digress. So, how bullish are you? Are you guys doubling down right now with the downturn? Are you expecting to see any deals come across at better prices now that things are kind of slowing down in the housing market?
Yes. So on the one hand, there are going to be a lot of people that are downsizing in terms of renting. So people are going to be moving from bigger, more expensive rentals to smaller ones. And so, those Class B, Class C properties are probably going to get more in demand. And on the other hand, in any, economic downturn, there's going to be a lot of owners that are going to want to cash out and sell because there's a lot of risk involved, or people who are older and want to retire.
Yeah, so we're really trying to take advantage of I think there's a lot of opportunity here, and there's a lot of people who, will be looking to get out. And so as long as we have the right cash ready for them at the right time, we can make something that's good for both of us.
So if somebody is looking to invest in Midwestern multifamily real estate, should they get in touch with you? Are you open to outside investors right now?
Yeah, we're definitely open to outside investors. We're communicating with a few outside investors who would kind of come on and, maybe do the loan or the down payment, depending on how big the deal is. So we're open to all sorts of, different partnership structures or like just a traditional loan structure. But we're definitely very interested because we are actively looking for these off-market opportunities. They're popping up a little bit more and more frequently every week, it seems.
Yeah, well, the way that you just put it, it sounds pretty convincing. Okay, so last question here. You both are in your 20s. There's not a lot of 20-year-old real estate investors. What would your advice be to someone in their 20s who's looking to get their foot in the door with real estate investing? How do you get them to start? Where should they look?
So I think the most important thing when you're 20 and you're trying to get started is to get your first property. And I think I've heard of and talked with and given advice to so many people who have been like, how do you get started? And they spin their wheels analyzing things and they never buy the first one. And it's been, 3-4 years, you look back and they're not doing anything still. Right. And so I think that happens a lot. So I think pick something that, it's okay if you lower the bar a little bit. Run your conservative analysis and make sure that you're not going to break your bank if this goes south, but you don't need the highest return on your first one. You can buy a little smaller property to kind of use it as training wheels or like trial run how this whole process works. And what you're going to find is all the question marks in your head, they all get flushed out when you go through closing and when everything, kind of people are asking you for things and you don't know what they are and you have to Google them. And it's going through closing that gets you to learn all of those things. And so a lot of people hesitate until they get there, or they hesitate and they never get to the offer. And so they never learn all those things. And that's like the perpetual cycle that just keeps them out of real estate, which is unfortunate. So I would say whatever you can to take action as quick as possible. And honestly, make an offer on something that is it may not make you a ton of money, but it's safe enough that it won't put you too far financially down.
Oh yeah, you learn by doing and avoid analysis paralysis. I dig it.
Exactly.
Really appreciate you two coming on with me. I think it was a good video. So I'm going to end this recording. And